everyone, welcome back to my channel where I talk about all things sustainable, eco-friendly, and consumer conscious. And you guessed it, today we are talking about money. So today in the video, I'm going to talk about what does it mean to be investing socially responsibly, and how do we know, how can we find companies that are socially responsible, as well as some things to watch out for and some strategies to take. So stick around. If you like these ideas, if you like this video, and if you like the things that I'm about to talk about, hit that like button so more people can see this video. Thank you for joining me once again. If you are a subscriber, I thank you from the bottom of my heart. You are what keeps me going. If you are new to the channel, welcome. I talk about things such as sustainability, environmental issues, as well as my gray hair. And if you like that, consider subscribing. So ever since embarking on the sustainability journey in August, I have been talking to people and kind of assessing my own situation in terms of investments. I even put out a call to action on my Instagram asking people about their ethical investment strategies, and the response I got was a lot of confusion, a lot of disappointment, so I wanted to kind of look into it even further. And when I looked at my own investments, I was shocked to see that a lot of the things that I currently invest in are actually really, really dirty. What do I mean by that? I mean that the companies that I invest in by putting my money into these index funds are associated with oil and fossil fuel production and unethical companies, as well as like water deprivation, as well as unethical social issues such as unfair treatment of laborers and stuff like that. If you're a responsible adult, you probably have plans for your retirement, and you probably invest in the stock market. I didn't start investing in the stock market until I read a wonderful, amazing, incredible book by Andrew Hallam, and I'm gonna link it down below. Everybody must get it and read it because it'll change your life. And ever since then, I have taken the couch potato approach where I invest in index funds and some bonds of different countries' markets. Additionally, when Larry Fink of the BlackRock came out saying that, as a company, they're only gonna look at socially responsible investing strategies, I decided that I need to further look into this to make sure that I am woke to this strategy. So what is SRI? What is socially responsible investing? That is the understanding that beyond investing in regular companies such as your Apple, Exxon, and Nestle, we can actually control what we invest in and choose companies that engage in socially responsible practices. JP Morgan did one of their survey studies last year, and they found that 86% of millennials and 75% of non-millennial people who took that survey actually think that all companies should engage in global sustainability. What was interesting is they found that about 84% of women were more interested in investing socially responsibly than men. It was only about 67% of men. And in 2018, socially responsible investing, or SRI, has grown 63% in assets, which is really, really good. So not only are millennials interested in socially responsible investing, it has been a trend that's been on the rise for the past about 10 years. Additionally, a lot of people have been divesting from fossil fuels. Divesting means that people have been taking out their money from, investing in companies that engage in fossil fuel production or processing, anything to do with fossil fuels, and instead they've been investing that money in green companies or green energy companies or something else that's more socially responsible. 350.org has been really involved with this divestment strategy. They've been working with a lot of universities as well as religious groups and other institutions, actively kind of campaigning for divestment from fossil fuels. And since they started in 2012, they have been successful in convincing people to divest to the point where $12 trillion has been divested away from fossil fuels. Yay. And it's been such a big pressure for companies to divest from fossil fuels that even big bad banks such as Goldman Sachs have committed to cut their kind of investments into Arctic oil exploration as well as some coal mines. So how do we know if a company is actually involved in socially responsible practices and if it will be considered an SRI? Well, there's something called the ESG. ESG score stands for environmental, social, and governance. So each company gets an ESG score, but some of them are really low and some of them are really high, depending on what practices they engage in. So environmental, or E, stands for environmental. So these companies are either actively engaged in bettering the environment, or they're engaged in some kind of sustainability practice, or they're just not actively trying to destroy it. Social stands for things such as labor practices, such as how well companies treat their workers, if they have healthcare, things like that. And governance stands for how is this company run? Do they have women on the board? How many people are involved? How much do they get paid? Things like that. So to show you where to find the score, let's go over to my screen and I'm going to show you how to go about finding it. So the website that I use to look this up is always Yahoo Finance, and you just type in any kind of stock you want and it'll give you all the information you want about the stock. So the stock that I chose to look up at is the Apple stock, and it's because, it's familiar, everybody knows it. So we type in the symbol, or if you don't know the symbol, you could just try to type in the company name and it'll show up as well. So here we are. Here is Apple, and this is everything you need to know about the Apple stock. It can show you, the price per share, how they are performing, other things about the stock. We are particularly interested in looking at its ESG score. So we are going to go to this tab here called sustainability, and this will show you where they score with their ESG rating. So environmental score, 0.6, not that great. Social risk score, 13, also not great. Governance score, 10.3. Really, really not great. So overall, they are, they have the score of 24. That is very, very low. And you will see, and I'll talk about this later in the video, that Apple is often included in the SRI portfolios, which is really, really confusing. So let's look at a company that's supposed to be really good for our environment, and that is Tesla. So here we are, Tesla stock, sustainability. Environmental, you would be surprised. It's very, very low, 2.8. Social, 17.4. Governance, 11.2. So overall, 31%. Again, not super great. And that is probably because they are involved in a lot of battery production, but these batteries actually involve a lot of cadmium, which has to be mined, and a lot of times it's mined under completely unethical conditions and in very impoverished countries where workers are not treated very well. So this brings me to my next point, which is not all ESG scores are created equal. Just because they score high on the ESG doesn't mean that they are completely socially responsible, so you have to do further research. If you are an index fund investor like your girl over here, even if your fund falls into the SRI category and has a high ESG score, this fund may still involve some of these big bad companies that overall do not score high on the ESG score, but they may score higher in one of the components. In the end, ESG is something that is really useful to be aware of when choosing your stocks or index funds, but it's not the only thing you should be looking at, and you should be doing further research into the companies that are involved in your fund or the individual stocks in order to make your final decision if you're looking for sustainability and, greenifying. So a lot of the people who commented on my Instagram about SRIs were really adamant about losing money with SRI investment. And some people went as far as to say that instead of investing in socially responsible stocks and companies, they invest as normal into your regular index funds, but then supposedly they take the profits that they made from this investment, okay, and kind of donate them to a good cause, or just buy a few of the good light bulbs and then, recycle their bottles. To me, that is a completely backwards way of thinking about the power of money. Money can be good if you use it for a good purpose, And what these guys are talking about of investing in bad companies, but then taking supposedly their profits and like buying some light bulbs, that is to me completely backwards and the wrong way of thinking about making good in the world and caring for Earth. So in order to kind of break that myth, but also slightly support it, let's go back to my screen and I'll compare some index funds to the S&P 500. So again, I'm here at Yahoo Finance and I am going to look at the KLD 400 social ETF. As you can see, KLD social ETF is kind of an index fund that ranks really high on the ESG score. It's composed of about 400 companies that rank really high on the overall ESG ranking. And let's compare it here to your regular S&P 500 here. And look over here. For the last kind of little bit, it has been following the S&P 500 almost exactly, at times higher, at times lower, but overall you would get the same amount of return, even a little bit higher. So that myth is busted. Another stock I'm going to use as an example is the Emerging Markets Equity Fund CV Mix. You can see when comparing it to the S&P 500, if we go back in the years, up until about 2018 mid-year, it was doing really well. And right now it's kind of trailing behind the S&P 500, not by, you know, a crazy amount of percentage, but still it's quite a bit of a difference, but maybe in the future it'll pick up. Another fund that I want to look at as an example is the FSLEX, the Alternative Energy Portfolio Fund. On the sustainability scale, so the ESG score, pretty high. But when you look at its performance right here, comparatively over the years, again, up until 2018, it was doing really well. And in the last kind of year, it has really tapered off compared to the S&P 500. So as you can see, investing in index funds specifically that are ranking high on the ESG score may result in some investment losses. So you have to really first do your research on the type of fund that you're interested in investing. And secondly, you have to decide for yourself if you are prepared to take that loss versus, you know, your moral responsibility to the world. No matter what your choices with individual stocks or investment through index funds in terms of SRI, how can you do it? That's the big question that I guess a lot of you are asking by now. Well, if you're American, you can go with Vanguard or Charles Schwab or Robinhood. All of these companies specialize in investment for people. And through these companies, you can choose your own portfolio or you can choose to buy individual stock. Therefore, you can control what companies you would like to invest with. If you are a Canadian, then I would highly recommend Questrade because they, again, cater their portfolios for people's needs, including socially responsible portfolios. So they have actually a whole SRI portfolio. However, still in their SRI portfolio, they have this index fund, which unfortunately includes things like Nestle and other like big bad companies. Again, as I mentioned before, you must do your research before kind of committing to an index funds, because if you have a look at any highly ranked ESG index funds, they include a lot of the companies that you wouldn't expect to be in an ESG index fund, such as ExxonMobil, Microsoft, Apple, as I mentioned, Tesla. So even though they might rank higher in one of the acronym letters, they are not overall a responsible company. However, if you're not ready to delve into the world of investment and index funds, you might want to consider working with an ethical bank. The whole idea of ethical banking really came from the Triodos Bank from the Netherlands, and they actually even made an alliance called Global Alliance of Banking on Values. So if you are interested in working with an ethical bank, you might want to go on their website and check out all the banks they work with to see if your bank is on the list or which banks in your area are on the list. Again, there are numerous banks from the States that are on the list, tons of Western Unions that are on the list for Canada, some in Europe, and even one in Mongolia. Overall, the more research I did on ethical investment, the more kind of hopeful I became with the idea that I can control where my money is going, which companies it is supporting. However, with that also came a little bit of disappointment because some things that are considered to be ESG or high ranking on the ESG scale or score are not actually ethical, environmentally responsible, socially responsible, or governance responsible. They might be only responsible in one area. Additionally, if you are really only interested in making a future for yourself in terms of finances, then ethical investment could be just a part of your portfolio. I think that's what I'm going to start with. At the moment, I'm going to invest in a couple of index funds that are specifically rated to be considered SRI, and I'm going to continue doing research to kind of adjust my investments as I go along. So I know this video was packed with information, new terminology, and perhaps new ideas. However, I hope I broke it down to make it kind of more digestible and easy to understand. It's important to remember that whatever you choose to do with your investments, as long as you are conscious of the choices that you are making, and perhaps that makes you a little bit more woke to the choices that you could be making instead, we can all hope for a better future. Thank you once again for watching. See you again next time. Bye.